Thank you for joining our roundtable discussion at the Wilmington BizExpo. So we're calling this discussion Angels and Entrepreneurs, and we're kind of looking at investments from two sides of the table. And we got a really good panel with us who's been involved in a lot of different companies, several of them on the investment side as well as on the entrepreneur side. So we're calling this panel Angels and Entrepreneurs. And I'm going to let each of the panelists introduce themselves first and the organizations they represent pretty quickly. But the goal is for this to be interactive. So please put your questions in chat. We'll pull some of you into the room so you can ask your questions. You can be on video and ask your questions directly to the panel. So whether you have questions about being an angel investor, or if you have questions from the entrepreneur side about approaching potential investors. So we will, let's get going with Charlie. You want to kick us off, and then we'll go to Jim and Carlos.
Yeah, sure. Thanks, Rob. Happy to be here with everybody today. It's good to see Jim and Carlos and Rob and the rest of the Wilmington Biz team. Thanks for putting this on and inviting me to hop on. As Rob mentioned, my name is Charlie Banks. I'm the managing director, one of the managing directors of VentureSouth. We're an early stage investment firm based in South Carolina. We have soon to be number 16 different community-based angel groups that we have developed and managed for the last decade. We just surpassed $50 million in 76 companies. And we also have a presence in Wilmington with a good core group of investors there that are very active. So again, thanks for having me on, and look forward to the conversation.
Hello, everybody. I'm Jim Roberts. I am the founder of the Wilmington Angels for Local Entrepreneurs, WALE. I'm also the founder of the Network for Entrepreneurs in Wilmington, which is NEW. I'm also an active member of several groups around town, including 1 Million Cups. And thank you for having me on today.
And my name is Carlos Parajon. Thank you again, Rob, for putting this together and for inviting me. I'm the managing partner of a private equity group called Harbor Island Equity Partners. We were formed 13 years ago and have made a number of investments, almost 24 over that time period. We still have 9 in the portfolio that we will be monetizing to exit over the next 18 to 24 months. And so we typically invest growth capital into private companies, not necessarily startups. But I do the startup on my own through the Wilmington Investor Network, in which I'm a member, which has been very active since 2005 as an angel investor group here in town, making investments in more of the early stage companies. So I've been exposed to the early stage and to the later stage through both of those different endeavors.
Great, thank you all. So let's jump into number one. I mean, you're all probably at somewhat different stages, some overlapping stages of where you'd come in to invest in companies. I think mainly we have entrepreneurs on this call. So take us through what is the best way to approach investment groups like yours, and what are the key things you're looking for from an entrepreneur at the stage in which you do your investments?
Well, I'll take it. I mean, excellent question. From a private equity point of view, that since we're looking for a growth stage investment, that would be sort of the point at which the company is at an inflection point. So it may have been founded by entrepreneurs. It may have been a spin-off from another company. It may have been a group of folks who came together to purchase a company and need capital. So at this point, what we're looking for is a solid plan in which to use the capital that they're looking to raise, and a growth plan. So you know, everyone wants to talk about exits. Exits are typically a little premature at that point because we're looking at a 5 to 7 year run rate, and no one can predict what can happen over those 5 or 7 years other than having a strong plan for growth. When I look at the earlier stage investments, and both Jim and Charlie can speak to this better probably, what we look for in entrepreneurs is a solid understanding of the business, a plan as well for the business, a go-to-market plan, a commercial plan, how they're going to use the funds, where they're going to spend it, how they're going to grow the headcount, how's the business going to scale. And typically at the early stage, you know that your funding is not going to be the last funding for that company. So you want to see how they can manage to the next stage of funding and grow from there. I'll let the other guys chime in at this point.
Yeah, I'll go next. We typically write the first check into the company. So we're very early, very active. We're about to make our 14th investment. And no one really expected WALE to start. So we started in 2015. We have our events through the Network for Entrepreneurs in Wilmington. If you are trying to reach us, that is the best way to reach us, is to let us get to know you over a few events that you come to. Since we are in Wilmington, we hold our events at Ironclad Brewery, and we are typically very early, but we are also very plugged in kind of within the Southeast. Carlos and Charlie and I have known each other for several years, and I'm also very active in the Triangle with Raleigh-Durham, and I'm part of kind of a monthly call that was supposed to happen tomorrow morning, that all the angels in the angel managers in the Raleigh-Durham area meet on a monthly basis, and I get to kind of syndicate with them and talk with them about deal flows. So we try to be very proactive in finding additional investors once we have made an investment.
Yeah, so this is a good conversation, because what you guys have here is effectively bookends as it relates to a life cycle of a company. You've got Jim and his group that are very instrumental in helping get the earlier stage funding. The company's taken them from concept to revenue, and then on from there. And then you've got the later stage private equity with Carlos and his group, and then oftentimes we at VentureSouth are filling that middle of the gap. So our average check size is in that 750 to $1 million, $1.2 million range, and we're oftentimes after folks like Jim. Jim's usually their first outside of friends, families, and fools kind of money. They're the first professional money that we would call it coming into the deal, and then we would follow up that with with the network approach, where we're getting many different investors involved in the group. But in terms of what we're looking at, it's not unlike anything that Carlos and Jim are also looking at. We're coming in oftentimes the second stage. We're looking at what the benchmarks and milestones that they've met from that first round of funding into this round. It's a big cliche, but we're absolutely betting on the jockey, not the horse. So we spend a lot of our time with the entrepreneurs and the founders, and getting just a good gut feel on whether or not these are the people that are going to execute on the plan. At this stage of where we're coming at, we are starting to talk more about the exit piece. We're spending time in the market. We're looking at M&A comparables. We're doing our own modeling to see, if we invest X amount, will it generate a return? So the exit strategy itself is important. The team's important, and then the overall size of the market is something I think that we try to wrap our minds around, related to just how big the company could get at scale.
So take us through, for each of your groups, what kind of deal size do you mainly look at these days, and what stage? Jim touched on this some, but what stage are most of the companies in when you enter the picture?
Yeah, I like to talk to the entrepreneur as soon as possible. I like to joke that if you had that great idea in the shower, I want to talk to you as soon as you get dressed. So we like to talk very early. Obviously, we're not going to write a check that early, but we're going to get to know and ask you to achieve some very minor kind of milestones to test your follow through. And our investors can come in from $25,000 minimum investment all the way to $150,000, $175,000, again, as kind of that first post fools, family, friends kind of money that Charlie talked about. And to be clear with your audience, I am not an investor. I'm simply manage the process between the entrepreneur and the investors. We do have kind of a pool of investors that we take to, but they choose on their own which of the deals individually that they would like to invest in.
So with us, typically the deals that we're getting, and you'll probably talk about deal flow at some point, but the deals are a little bit larger in size. For example, just as an example, I'll give you the last one I received, which was an $8 million raise for a company that had already invested $3.5 million. So we obviously wouldn't take the entire participation, but they were looking for a lead investor, and we would take a piece of that if we were to invest. And this is a company that had already done quite a bit of work over 2 to 3 years. And this, again, was that sort of B round, if you will, on the company. It's not necessarily always called a Series B, for those of you who understand that. But it is not that first check. It is more the second or third check into the company, because they already have traction. They've invested in the company. They've got a team. They got a plan they're going to execute on. And you know, they're using the capital to grow the company, and that's sort of the critical piece here. All the capital goes to grow the company, but in some cases it's to grow it from scratch. In other cases, it's where they already have an infrastructure in place, a product or two in place, some customer traction, and this is to really hit that inflection point where they can take off and execute on that plan over a few years until the next funding round, if there is one.
So I gotta say, the visual of Jim waiting outside people's bathrooms, waiting for business plans might be the biggest takeaway for me today. So I look forward to that. Thank you, Jim.
I said they would be clothed. I didn't say they were straight out of the shower.
But you know, so to kind of cap that off, I mean, we like to come in, you know, post revenue, and that is defined. That definition is quite wide. You know, so if you've made $1 to one customer, you're effectively post revenue. That at least gives us something that we can model out, something that we could put some economics around. But you know, our low end of the low end of what we typically do is in that 250 to 350, 400 range. The average check size for us is about 900,000, a little bit right around that range. And just to give you an indication, a couple of the two deals that we've done in the last 2 months, there was a company raising, both North Carolina companies. One was raising $2 million, and we were participating at half that as a lead investor. The other was raising $1.5 million, and we put up 950 of that as a lead investor too. So, and then we'll go out and syndicate with other groups like WIN and some other groups around the region to help them syndicate the rest of that round.
Great. If you jumped on this call after we began, please put your questions in chat. And until then, I'm happy to keep asking questions myself. So, so when you're looking at deals, so one, give us a sense of how many deals do you look at in an average month, and what are the biggest mistakes entrepreneurs in how they approach you?
Yeah, I'll start there. So we're looking at 20 or 30 deals a month. That's our average pipeline right now. And you know, we the way our process works, we whittle that down to a handful that we then bring into a formal screening meeting. At that screening meeting, we'll take one or two out of that group. And if you do all the math at the end of the year, that lends itself to about 8 to 10 deals, new deals a year that we do. You know, across the whole venture capital world, you know, the professional firms are investing in about 3% of the deals they do, deals that they look at. So we're tracking along that metric. But in terms of some things entrepreneurs shouldn't do is wait until you're raising money to reach out to folks like us. As Jim alluded to that earlier, and that's critically important that you get on the radar of people like Jim Roberts early, so that they can guide you throughout the process. You know, there's a lot to be said about educating entrepreneurs on how to position the companies for funding, and we spend a lot of our time not educating entrepreneurs on how to write a business plan or how to write financial models. We spend our bulk of our education time teaching them how to raise money, teaching them how to position the company for funding. So I would say get on radars early through warm intros would be the thing that folks don't do well at times.
I want to follow up on that because Charlie made a couple of very good points about that, because that is a major mistake that entrepreneurs don't understand how long it takes to raise money, and in particular from whom. Because there are investors such as ourselves. We're more generalists, but there are certain things that we will not do, and there are other investors who are much more particular about what they will do. So having a blanket ask, if you're raising a company in a medical device, you don't go to a venture firm that only invests in software, and that is very easy to find out. But it's a critical rookie mistake to send your business deal to an investor who doesn't even look at your sector or your industry. So some of that research has to take place. That's a big mistake. And it takes a whole lot of time. A warm referral is most important than a cold call, and asking for an NDA up front is another mistake that I see. All of us are investors. First of all, the legal ramifications of signing an NDA are onerous to those of us on our side of the table. If you sign in 20 NDAs, you're going to be bound by so many things that it doesn't allow you to look at other deals. And that's what we do for a living. We're not stealing ideas. We're not looking at all these companies to steal the intelligence. And if we did, we'd be out of business immediately. So that's not what we do. And secondly, if you need to sign an NDA to look at a teaser, then you're truly showing how immature you are. Because if what you have in a teaser is so proprietary that somebody needs an NDA, then there's something wrong. Then it's not really a proprietary idea. So that's on that end. And in terms of deal flow, it's sort of peaks and valleys sometimes. Lately in this, the last 3 months during COVID, I get about a dozen deals across the transom every day. Not warm referrals, just cold calls with a pitch, usually an executive teaser with an NDA attached to it, which again, I just addressed. And most of them are, it's a quick no to 95% of them. So in terms of looking at actual deals a little bit more closely, it's far fewer than that. So trying to separate the wheat from the chaff is half of what I do. And in terms of, we've been in business for 13 years and in total maybe made about 26 investments. So the math is 2 a year. But I will look at well over 100. So that's one thing that entrepreneurs need to understand as well. I respect that every entrepreneur thinks their idea is the best in the world and the best in sliced bread, but it's not always going to be the case to the investor universe that you approach. And there are a lot of deals out there. So patience, understanding, and doing your own research. You got to do research on who you're asking money from and why you're asking money from them and what can they give you other than just a check.
So I'll chime in. I probably see 12 deals a month that I really take a look at beyond kind of what Carlos said of the initial, this is so bad that I can't, take too much time looking at it. And the mistake that entrepreneurs make is you have to know that your whole round will probably not be raised in Wilmington, and that you need to network in Charleston, and in Greenville, South Carolina, in Raleigh, and in Durham, and Charlotte. And there's a new angel network in Greenville, North Carolina that's actually been very active. Once they got their membership together, they've been very active in writing checks. And that guy, Mark Wadowick is his name, spoke at one of our events at Ironclad Brewery. So he's willing to take a look at Wilmington deals and talk to entrepreneurs in Wilmington. And there's a lot of opportunity, but you have to go and make it happen. You can't just lean on, people like myself. We're willing to help to a point, but we have to have a relationship with you to make that warm referral that Carlos talked about. We have to know you beyond one meeting in a coffee shop. We have to know that you can achieve the milestones. And we're going to give you some medium heavy lifting to kind of show us what kind of follow through you have before we're going to be willing to open too many doors. So As both of the previous two speakers have said, get to know us early before you need the money, before that deadline where you have to give up because you're out of money.
We've got a question from Tom. Actually, Tom, we'll just pull you into the meeting so you can ask it directly yourself.
Yes, good afternoon. This is all great information. My question relates to each one of the angel investors, or is there specific industry segments that you're targeting? And then also the question is what is your current makeup of percentage by industry that you've invested in?
I'll start with that. I mean, when we get that question, Tom, our off-the-cuff answer is always that, we're fairly industry agnostic. I mean, that we'll look at just about anything. But ultimately what we end up investing in are companies that are, have some tech-enabled value proposition in a market that, has proven that companies can scale fast in. So that tends to lend itself to a lot of B2B software, medical device, and assuming it's not heavily, regulated. But, what we typically don't invest in, it's sometimes easier the way to answer is that, there are a lot of groups that do very well in investing in consumer products. We're not that group. If you're making a widget and selling it to the broader consumer base, then, we're not your group. A lot of it has to do with just the capital it takes to compete in the consumer marketplace. Oftentimes is a lot. So we just don't wrap our minds around that very well. But there are some groups that do it well. But along that part and parcel of that same question is back what Carlos said about doing your homework. It's really important to understand what people invest in. So that's likely why you asked the question. So I'll send it over to Jim and Carlos now.
Yeah, so we do mostly infotech software, mostly B2B. We've had some investments in life sciences, such as a company called VitalFlow. We did an ag tech deal called Measure.io. Our next product is in neither of those businesses, so that's mostly what we have invested in.
Like Charlie, my answer is easier in what we don't invest in, but because typically we're industry agnostic. But some that we will not invest in, for example, are therapeutics, and the reason for that is quite simple. It's the timeline is excessively long, the risk is excessively high, and the amount of capital required is also enormous. And you'll find, and this is my answer as an angel. We're not going to invest in companies, and you guys can chime in, that requires a total of $100 million in investment, because we're going to be the first money in, writing a check for, in Charlie's case, maybe $900,000. But if there's going to be $100 million behind you, you're going to get crushed, and that's just not a good business model. Some of the other things that we will not do that are also along the same lines in terms of sort of fashion risk, if you will, are movies. We don't do movies, film, production. And the last one, which is a little tricky, is the real estate market. And we actually, Win has done some real estate. We have done some real estate on the private equity side. But I see it not as a typical angel investment, and part of the reason is the way real estate deals are structured, where the debt will typically have personal guarantees, and so that makes it difficult for any angel to have to put up a personal guarantee on a real estate transaction. So those are just three examples. There are going to be others. We in my firm, we don't do any of the cannabis deals just because we don't want to be in that business. But the rest we're pretty agnostic. It's really all about a company that can scale, and is one where we trust the management team.
So Carlos, you're still in though on that deal we brought you to build that new bridge over the Cape Fear River, right?
That's right. That's right.
So switching to the other side of the table, to looking at your investors, the folks whose capital you're deploying, tell us a little bit about them. What kind of time horizon are they looking at? Are they pretty passive? Are they very active with you? Just kind of give us a sense of that world.
I'll start with that because when we started Harbor Island Equity Partners, we all the capital is local. So all the investors are individuals or families here in Wilmington, and that was done on purpose. Number one, because I and my partners knew them all, and it's always easier to deal with folks you know and can talk to and can have a cup of coffee with or a beer at the end of the day. And so we didn't have any institutions, the pension funds or institutional funds in our fund. We're in year 13, as I mentioned, so we're nearing the very end of our term. They are not passive in the sense of not knowing what's going on. They know exactly what's going on with all the investments. And originally, the way the fund was structured was sort of a variation on an evergreen, which meant that in the early deals that we exited from, the returns would go back into the fund to reinvest, which is not a usual structure. So all the investors were treated as partners, and some of them actually brought us deals. So it's even though we have an investment committee and a management committee, the investors participated sort of as if it were in a partnership, and that turned out to be a very good structure and one that was fulfilling for both sides. And it's worked out well, and so far they're happy. We were early investors in Encino, so they're actually quite happy. So that's worked out well.
Yeah, so we've got two ways folks engage with us. We have a passive model and an active model. The active model is an individual investor will pay an annual membership, and then they pick and choose their own investments. So we provide the platform, the avenue for them to make their own decisions with their own resources and capital to make those investments. That's the active model. The passive model is we have raised a series of sidecar funds, is what the industry term is, and it basically acts like an index fund. So the passive investor can put money in the fund. The fund only invests in deals that the active investors have chosen to invest in. So there's a trigger mechanism there that, for easy math, if the active membership is an aggregate of $500,000, the fund will match that with an additional $500,000 to make that full investment. So those are the two ways that folks engage with us.
So we have a very small group of investors, and they're all in Raleigh or they're all in Wilmington. So it's very easy for me to reach out and get quick decisions. But I do a lot of the upfront kind of getting to know the company, and then obviously hand that information to the investors. And our investors are typically much more active after they've written an investment to try to help the company or guide the company or find some additional partners. And that's typically how we operate.
So I wanted to touch on a couple of things specifically for Wilmington. So we're the Business Journal celebrating its 20th anniversary this year. So in between trying to dodge coronavirus, we have been kind of looking back at the past 20 years of our region, and also trying to look ahead 20 years about what this region can expect and how we get to where we want to go. So I'd be interested from your perspectives. I know, Charlie, you're probably at a little disadvantage here being way, way far away in South Carolina, but I know you've been here some. Give us a little perspective on the landscape of investable businesses in our region. And probably Carlos, as the old man, I'm going to go to you first. How long have you been here, Carlos?
15 years now. 15.
Okay. So maybe, and by the way, you beat me. I've only been here 13, so I was not here around for.
I remember when you came. We met early on when you came. That's right.
Yeah, so kind of give us some perspective on the region. When you're looking at deals here versus elsewhere.
That was the same question you asked me 13 years ago when you first arrived.
And you steered me in the right direction too, Carlos. Yeah. I appreciate it.
Yeah. So I'm actually very optimistic on Wilmington and the area. Having been here 15 years, the town has grown up quite a bit. And as I was telling some folks, I was involved early on with the CIE at the UNCW. I was on the advisory board there and helped recruit Jim Roberts later on when he was running the CIE, and that turned out to be sort of the hub of an ecosystem here in town, which continued to grow over the years. And whereas in the beginning, you could see Wilmington as a sort of strange economy that was driven by real estate, tourism, and the hospital. Now there's a lot of technology going on. There's a lot of smart young businesses that are happening, and contributing to that growth was Castle Branch, for example. It was George Taylor and his various businesses, National Speed and Untapped, and of course Live Oak Bank, which spun off Encino. So I feel as if there's been a lot of activity in terms of startups, in terms of technology, in terms of providing an ecosystem. Still behaves like a small town, meaning it's easy to meet people. It's easy to have an exchange of ideas. It's easy to call someone up, have a cup of coffee, and get some advice just to pick someone's brain. And I do anticipate that as Live Oak and Encino continue to grow, they're going to spin off additional businesses. As you all know, and you've reported, Rob, the Live Oak has done a couple of initiatives. One, started a very large fintech fund called Canopy Ventures, which is over $500 million, looking to invest in fintech companies, not necessarily here, but Canopy is located here. And they're also starting what appears to be an incubator downtown, which I don't have all the details, but again, initiatives that are helping to encourage that kind of growth in the ecosystem and to encourage entrepreneurs to start their own businesses that are significant ones that can scale. I expect Encino to spin off some companies. There's a great pool of talent at Encino and Live Oak and Untapped and Castle Branch that as entrepreneurs, they will spin out and start their own companies. And given the wealth that's been created here in town, they will be able to find the financing, or at least we hope that it's available here. So I'm very optimistic. It's been a transformative change over the last 15 years, and more so in the last, I'd say, 5 to 7 years. And so I think the growth from here on out is going to be very, very encouraging and very good. I hope that answered your question.
Yeah, I'm gonna go next because I'm gonna let Jim round out the conversation, just because I know how passionate he is about the Wilmington market. So I've got a unique story to kind of how we got engaged in Wilmington, and it kind of goes back to what Jim said earlier about networking. So I frequent 1 Million Cups in different parts of the Southeast, and I was at one in Columbia, South Carolina years ago, and there was a guy there pitching. His company was called Quipt, and it's Wilmington based, and Robert Preville was the founder. And I said, this is a really good idea. So engaged with him after the fact, and VentureSouth have since made a couple of different investments in Quipt over the years, and we're very proud to have Quipt as part of that ecosystem, as part of our portfolio. So fast forward a couple of years, we're connected with Rob through the Quipt deal and some other stuff going on there, and there was folks that showed some interest in joining VentureSouth, and so we partnered up with Wilmington Business Journal, and so now we've got VentureSouth Wilmington, which is a group. We've got about 22 members now, and they're very active on the fund side and the active membership side. And we're entering into diligence with our second Wilmington potential portfolio company right now. So we're excited to be in Wilmington. We're looking forward to growing that market for us pretty aggressively. But no one is more passionate about Wilmington than my friend Jim Roberts. So I'm gonna let him round out that conversation.
So I was the initial executive director of the incubator attached to UNCW. And I've been trying to work very hard, very, very hard every day to change the innovation factors of starting a company in Wilmington. I've been very active in what I call the coastal corridor, which is I-40 between Raleigh-Durham and Wilmington. And how do you get all of those resources from one of the top 10 cities in America for innovation and bring some of those people and their resources and the state organizations to spend time in Wilmington and give the entrepreneurs in our backyard some respect and some resources. And so we've invited over 60 investors over the last 7 years to come to Wilmington, and some of them have written checks. And some of the organizations who didn't feel welcome in Wilmington, that are statewide organizations, have come here and they have written checks through grants. They have put our companies in pitch contests. They have given our companies awards, and Encino is one of them. Untapped is one of them that has kind of been recognized in front of 800 technology executives as the software company of the year in North Carolina. And I know that never happened before 7 years ago because I've been a part of those organizations for 20 years. And so where is our innovation factors going? They're going to go upstream a little bit. One of our companies that I'm very proud of to be associated with is called Opioid. And they are addressing one of the top 3 problems in Wilmington, which is opioid abuse. 11% of the working age people in Wilmington have some kind of addiction to opioid drugs. And so if we have a company that's addressing that issue, and they're called Opioid, they just landed what's called an SBIR grant. It's very difficult for David and his team at Opioid to raise money because it is such a moonshot of an idea. It is a big, expensive idea. And early stage angel investors don't necessarily like those ideas. But one way to validate that idea is to go to the federal government and address one of the problems that they're having. And opioid is a big problem. And so this company got a $276,000 grant from the federal government, which if the idea progresses to a product, that number will double. They will get a phase 2 grant and then a phase 3 grant. And then the government becomes a client, and that can be $1 million per year kind of client deal. And so that's where we're trying to head with Wilmington's innovation scene, is to make it a little more sophisticated, swim upstream a little bit further, continue to, I will say, I badger these statewide organizations that they should come to Wilmington because we are part of the damn state too. And I don't mind being that fool that you guys laugh at, but at the end of the day, we get results, and that's what I'm willing to fight that fight, and that's where Wilmington is going. I've seen the data that has changed from 7 years ago when the CIE opened. We were just listed as the 4th best county in all of North Carolina for density of entrepreneurs, and we were just named, I hate this number, but the 91st best city in the globe for an emerging ecosystem. So globally, so we only trail Raleigh and Charlotte, and Wilmington is number 3 in North Carolina, and that would not have been said 7 years ago. So we are adding density of entrepreneurs, we're adding the resources they need, and the companies will grow and hire in Wilmington.
Let's go to Brandon. He has a question related to this. Brandon, we'll pull you in so you can ask it directly. Are you there, Brandon? I think you have to unmute here.
I am. Can you hear me?
Yeah. Wow. There's Brandon. I haven't heard from you in a while.
I know, it's been a very long time. How are you gentlemen doing?
Good.
Just had the pleasure of speaking with Carlos, and now I actually get to see him in person. Very nice to see you now in the flesh.
You too.
Carly, I met you a little while ago, and Jim, I always call him my Wilmington savior. So I always tell him that the work that he does is absolutely amazing. So what I wanted to ask was, and you may have touched upon this a little bit, but what is do you guys see as the next phase so that Wilmington can get the resources that it needs, whether it be mental or I guess brain power or actual funding, so that we can kind of become that, what I like, the mini Raleigh, that we're the next kind of biggest thing. Is it physical locations? Is it more technology? Is it 5G? Is it, getting more brain power down here? What, or is a combination of all of them?
I would say 2 things. I would say that we need now the employees of Encino and the employees of Untapped to come out with their own dreams of how they want to be entrepreneurs. They've been through the process. They've gone from the very start of the ideation all the way to the exit where the investors got their money out and buy multiples. And what now is their idea for the next great company? The second thing is, no one knows who the hell Wilmington is. We still get confused with Wilmington, Delaware. So how do we raise the profile of Wilmington as an actual business destination? And frankly, does Wilmington want that? Or do we want to be a tourism destination? Do we want to be kind of a residential real estate destination? Or do we want actual jobs that pay, you know, $75,000 to $100,000 or more? Do we want more of those jobs? And those are the two factors that I'm working on the hardest is, how do we get the word out about what we have as the nurturing community for entrepreneurs? If you're tired of Raleigh on I-40, or if you're tired of Charlotte, maybe it's too big, or you're tired of Atlanta, how do we get on the radar for the next set of entrepreneurs that are looking for a new home? And how do we help the ones that we already have?
Now, Brendan.
Yeah.
Now, I just to follow up on that. So a couple of observations. One, I saw your question in the chat before you got to ask it, and I would quarrel only with the perspective of the question, in the sense of, why do we have to be a mini Raleigh? Let's just be Wilmington in its own way. There's no need to be a mini Raleigh, and as a evidence for that, you know, you may have heard Pierre Naudet speak, and he said this many times. The CEO of Encino, they have had 20,000 applications this year for 200 positions. So think about that: 20,000 people who applied for a job here in Wilmington for 200 positions. That's an extraordinary number. That's an extraordinary validation of what a company like Encino can do to attract the talent to come here. And part of what attracts them, as he likes to point out, and what Encino likes to point out even on their website, is the quality of life that you can have in Wilmington. And it's not just, you know, the ability to attract that talent to a town where you have a quality of life, which is, you know, we are a destination, let's face it. So people come here as a destination. What's better than living at a destination community? So I think those are aspects around Wilmington that are highly attractive, which separates us from Raleigh. And I would again argue, I don't want to be a mini Raleigh. Raleigh has all kinds of issues that I don't want in this community.
That's a fair point, Carlos. Yeah. It's a fair point that we can still have kind of an ecosystem, but still point out to the fact that we live in the, you know, by the ocean, and that's a big factor in what it is that we get to get around here. Jim, I know that Charlie's done a great job in kind of accessing this market for people to invest, but is a potential other thought to get current business owners now that are looking into potentially growing, let's say, the things that they do? So instead of just looking at potential physical spaces, I'm even talking about someone like me. I do what I do, but I'm always looking for other thoughts. Is it potentially getting other business owners together and thinking differently on, why not build a fund that takes all the business owners here, put it into a pot, and start investing in local talent here or something like that?
Well, that's very interesting that you brought that up, because I had that very discussion today on a conference call with other Wilmington leaders. Is who in Wilmington is going to leave a legacy? Who in the business industry, who is from Wilmington that we need to kind of be a chair or a leader to kind of make things happen? You know, I'm a nonprofit leader. I am not a wealthy person. Who is it in Wilmington that's going to step up and say, as my legacy to the future of my city and my family's name, I'm going to make a difference in the future of Wilmington, and we're going to invest in it, and not just time, but also some money to, you know, I wish I didn't have to scramble to make a living as a nonprofit every day. If I could just do the work, I could have 10 times the impact. But I got to scramble to make a living around WALE and New. You know, we need someone to step up as a leader. You know, two of the wealthiest people that you've ever heard of are from Wilmington. Michael Jordan, $2 billion, And the wealthiest man in North Carolina, Jim Goodnight, is from Wilmington. Well, he's got $8 billion, but neither one of them have a real role in Wilmington. And yes, Mr. Goodnight's son is investing in the untapped headquarter building, but I mean, there's so much more that could be done. So we need somebody with those kind of relationships to, again, leave a legacy of the future of Wilmington.
I want to bring Charlie into this because he has a interesting perspective. One, as an outsider in the sense he doesn't live here, but two, VentureSouth is involved in a lot of different communities throughout the Southeast. So I'd be curious, Charlie, from more of an outside perspective, how do you view Wilmington?
Well, so outside of adding more tropical cafes, one thing that I do think that I do have a bit of unique perspective here. So one thing we talk about when we come into new areas is this flywheel effect. And we talk about this a good bit, is that what tends to build ecosystems is the recycled capital. It's not the initial capital. So what you need in any ecosystem is an educated investor base that has made money doing this. So we've taken the approach of educating the entrepreneurs on everything from term sheets, valuations, cap tables, everything that goes into making a good decision to make an investment. So we want our investors making investments into the best deals in the region so that they have a better likelihood of returning the capital plus some. But that plus some is where the ecosystems are built. And you can look back at Charleston and you can see that, the blackballs and, these big companies that, you guys have had some locally as well. And, the more of that kind of activity, the local investors that have made money and they start to recycle it. That's when the ecosystem really starts building that foundation. And I truly believe Wilmington it is this close to really building that foundation to where you're going to start seeing some of this recycled capital.
And Benefit Focus is the other one besides Blackbaud, right? Right.
Yeah, there's been a handful in Charleston that that those founders have spun out. Their investors have made money, and then when the education piece of it is when the next Benefit Focus comes through the pipeline, they know the questions to ask. They know what makes what good terms are. They know what structure is going to return. What structure is going to maximize their investment. And then the other side of that is the education piece on the entrepreneurs to try to bridge that gap. So you've got to train the entrepreneurs on how to position the company for funding, and you've got to train the investors on how to make effective decisions, so that hopefully the byproduct is going to be successful exits, no matter where the company is, so that when the next big thing in Wilmington comes to the pipeline, the local investors can support that company.
We've only got a few minutes left, so if you have any other questions, please put them in the chat. We got a question from John. We can pull you in to ask your question. You there, John? John, can you hear us?
Yeah.
Okay.
So, by the way, thanks, guys. Great presentation, really useful information. I was just kind of wondering if there is, what you would recommend for somebody that had, I don't know, 50K to invest, but didn't want to just put it into a passive fund, wanted to try and, spread that across 3 or 4 active investments, at 10 or 15,000 a piece. Is there a mechanism for doing that, or, how would you go about that?
I'll take that first, guys. So one thing we tell investors often is that, to understand the portfolio math, quick primer on that is that, think about it this way: half the deals you invest are going to fail, 25% are going to return your money, and then 25% is going to be that top, is where you get that outsized return. So if you blend all that together, you should be in that 20 to 30% return rate, footprint. So you're right. You have to go into it thinking that you got to play the portfolio. So no matter how long it takes you, no matter how much money it takes you to do this, the portfolio math starts working in your favor at about 8 deals. That's kind of where we think of it in terms of building a portfolio. Groups like VentureSouth, a lot of them have a minimum investment. So if you pay your annual membership, our minimum investment's $5,000. We currently have 11 open rounds. So you could put $5,000 in every one of these companies and build a portfolio very fast. Or you could take the slow approach and just just invest in the ones that that you understand. And again, it could take you can do one a year, you could do one every 3 years. It doesn't matter as long as you go into that knowing that you've got to understand the portfolio math.
Yeah, we have the same opportunity as where you could partner with one of our other members, and both of you kind of put in the minimum investment. If one wants to put in 12,000 and the other puts in 12,000, you get to that $25,000 minimum that the companies require to invest in their startup. The other way, of course, is crowdfunding. It's not a popular topic yet in North Carolina. There's been very few success stories, but obviously that's what's coming, is kind of a wait for the crowd to invest smaller amounts of money in more deals. And one of the original deals in North Carolina was a company called Ground Floor USA, and they invest through crowdfunding on real estate deals. So those are the two ways that you could participate.
Just to add on to that, a couple of important points for you, John, is that in most cases with an angel group or with a fund such as ours, or even the companies we invest in that you're looking to invest in, one needs to be an accredited investor. And that's an SEC regulation that you can look up to see all the requirements to be an accredited investor. But outside of crowdfunding, pretty much everything else requires that to happen, or for one to be an accredited investor so that you can invest amounts like that. Companies that are receiving the funds typically also have a minimum. So if you're investing on your own and you are an accredited investor, many companies have a minimum investment of, say, $50,000, if not higher. And that's to control their cap table, because otherwise it becomes very unwieldy. And to become a member of an angel group, you need to be that accredited investor where you can invest as much or as little as you want. At the Wilmington Investor Network, there is no minimum. So if you meet the accredited investor requirements, you can invest as little as $1,000 if you wanted to in a deal in which other members of WIN are investing. So just a couple of points to keep in mind.
I'd like to thank our panel and our attendees for watching. Just wanted to point out one thing on the agenda for the expo tomorrow. We'll have two of the more successful recent exits will be there. Trace Smith, the new CEO of Untapped, and Todd John, the founder and CEO of PlayerSpace. They're going to both be on a panel we're calling Cape Tech. That's at 9:30 tomorrow. So hopefully y'all can tune into that. I think we'll probably be covering some similar themes, but more from the entrepreneur perspective. So thank you all again for participating and being a part of our virtual BizExpo. See y'all later.
Thanks for the opportunity, guys.
Thank you.